May profits be upon you. Now, I completed the which ones did I do? The pound Swiss, the euro Swiss, and now I'm going to do the CAD Swiss. I have these red starred on my thumbnails and then red and white letters uh, to alert you guys that these are my favorites going into next week. There's big news on Wednesday and Thursday. There's the FOMC for the USD, and there is GDP data coming in also on the 29th, right? I need you to just be aware. These are earth shakers, okay? These are earth shakers. So let's just be cognizant of how actually that's coming in on the 29th, the 28th, on Thursday, the GDP for US dollar. Why am I looking at the US dollar in regards to CAD, the Canadian dollar, and Swiss, the Swiss franc? Is because what we're going to see is a shift. All right. Last week we saw risk on. All right. The market switched from risk off to risk on, and you saw the markets, the indices, the Dow, the S&P, the Nasdaq, and the rest of them move up, while the dollar receded, while the dollar pulled back in retracement, seemingly to get weaker. But it's short term because it's very bullish, very strong. All right. The thing is that if we see the markets who are fighting global inflation right now, all right, if we see the markets shift from from risk off to risk on, and then back to risk off, you know, this is going to show in the Swiss. All right, the Swiss is a safe haven currency. The Swiss, the US dollar, the Japanese yen, we're going to see come Wednesday, Thursday, and Friday, from the middle of the week on, we could see a big push in the opposite direction of how the week starts, as the market switches from risk on to risk off. Okay, so I just want you to be aware of it, and I think this is going to be a good play. All right, so let's go back. Excuse me. Let's go back to CAD Swiss. All right, if I can get my thoughts together, I'll be all right. Okay, now let's take a quick journey from top down, from the top to the down, down to the whatever. We're going to do top down analysis, whatever. All right, you see this long period of consolidation here. All right, price was pretty neutral. All right, bearish to neutral. Right, where you saw how the market was each month coming down further. We would bounce, and then, but each time we bounce, we were bouncing from a lower position, right, in this market in CAD Swiss. And then we went into this long period of sideways action. We went down to the bottom of the range, and now we see higher high, higher low, higher high, right? But we're still within the range. All right, that's something you have to keep in mind. All right, so let's take so what are we here? Are we bullish or are we bearish? Huh? Tell me. I think bullish to neutral. That's my take on it. On the weekly, it looks like we are breaking market structure to the upside. We are bullish here, aren't we? All right. And then what happens once we top out here? We fail to make a new high. Aha! We fail to make a new high. So instead of a higher high, instead of this being a higher low, it turns into a break of market structure to the downside. All right, I am not looking for buys in this market once it breaks here. All right, I'm not looking for buys. We have a lower low. All right, this looks like a lower high forming and look like it's being established there. Okay, so let's go to the daily. All right, this kind of price action is kind of funky. All right, but you do see price impulsing up, correcting, and then failing to break that high. All right, as long as it comes up here, because it didn't break that high, we don't have a continuance of the bullish trend. Because it swung back the other way. All right, well, it looks very bearish after a break of market structure, doesn't it? And this looks like a correction after this very obviously impulsive move. We have this corrective move, and this looks like we are just making a lower high, and we could expect that price will come and sweep this liquidity. In my view, I think it's high probability that price will sweep this liquidity after all of this momentum to the downside and this correction. We'll see price make lower lows. All right, I have the trading range here. We did manage with this pullback. This is the high of the trading range. This is the low of the trading range. That's the way I have it. All right, we pulled back higher, just higher than the 50% of the trading range. All right, this is the area I want to take shorts from. This is the area I want to take longs from, premium price, discount price. But it looks like this candle, the way it closed on Friday, was very bearish with a lot of momentum to the downside. So I'm thinking we're going to see some follow through with that. Now, let's go to the 4 hour where we make our money. All right. Again, we have news coming Wednesday, Thursday, Friday. Okay. And as far as the Swiss and the Canadian dollar, we don't have a direct high impact news with them. But what we do see here is this low, the low of this consolidated range, this trading range, the low here was broken, easy, boom. All right. Was this legitimate demand here? That you have to wonder, you have to ask yourself, is this legitimate demand? It didn't break that high. All right. Where did it take liquidity? Where did it swipe liquidity? Did it swipe up here? Or did it leave equal highs up here? Yeah, these are equal highs. It left equal highs up here. So we didn't break that. We didn't break that that high. There is no buy side swipe, no buy side sweep of liquidity. It's very interesting. So price comes on down, sweeps the low. Whenever I see consolidated ranges, I'm always thinking of it's accumulating orders. And while it's accumulating orders, before it makes its intended move, the breakout move, it'll do what some people call a fake out, sweep the liquidity low, and then come back for the buy side liquidity. Sometimes it'll continue on up, sometimes it'll come on down. But after the manipulative move there, the manipulation, accumulation, manipulation, and then distribution, right? So what can happen on the open? Lots of momentum coming down here, right? We're running into these areas of demand. This is an area of demand. Let me mark that for you. All right. And what would I be looking for? I'll be looking for a break of it, a break of demand. Here we are. All right. I'm not going to give this, I'm not going to dismiss this, but I'm not going to give this the a high weight of, I'm not going to weigh it heavily in a demand to supply flip zone, because it barely missed here. All right. So I'm not really thinking this, and plus it didn't break structure. So it's part of the consolidated range. We broke it. It's a breakout to the downside. That's the way I'm going to look at this. We come down to the demand. Do I expect price to reject from here? It's possible. This is the scenario. With up until Wednesday, I'm looking for price to maybe fill this obvious imbalance here, rebalance that going into supply, and then come Wednesday, Thursday, when the news pops out, risk off, and the flight to safe haven starts, and then we come on down. What target? What would be my target for this? Why did my voice get so high all of a sudden? Let me see. Let me see. Down here, ooh, look at this. Down here is a zone of demand, all right? And this is reacting off of this zone of demand. So, I'm going to look. I'm looking at this. This is efficient price action up to this point. All right, price is already traded down in here. I would figure all of these points here will be liquidity. So the demand zone is here. The demand zone is here. All right, the demand zone is here. And the middle of this this zone, if price is going to come on down here, I would figure it would take this liquidity before it decides to turn up. And I would look at the midpoint of this this zone of demand. Yeah, I would look at the midpoint here. So 73. Let's look at 73.80. That makes sense to me. I like that number, by the way. Let's see. I got the 80s, looking at 80s, the 80 endings. I got that from ICT a long time ago. Let's see. I'm looking here for my target. Okay. All right. So that's what I'm looking at. I'm looking at that. All right. Now, that's if we see a retracement. You know, price might want to just go ahead and be bearish. Why did I do that? Why did I do that? Got it. All right. So I'm going to get rid of this. I want to make this clean and clear for you. All right. I'm sorry. Why, man? You know, this it's like finger painting. Okay. All right. So what are the possible scenarios? One, price could trail on up until Friday or until Wednesday, Thursday, Friday, and then we can see that come down. All right. That is one scenario. All right. Or price could continue down, open bearishly on Wednesday, right? Come back to test the supply that's here, and we get a legitimate flip zone, and we could take a high probability trade to the target. All right, those are my two scenarios. I just gave you two scenarios. All right, either it's going to come up here and we take it down, or it may continue to open bearish until it breaks this zone, this demand zone, and then we can catch the flip when it comes back for a high probability trade to the downside. I hope you enjoyed this video. Show your appreciation, man. Smash the like button, smash the like button, smash the like button. Sing it with me. Drop me some feedback, all right? Drop some comments, ask me questions. I want to hear it from you, all right? Also, do not forget to subscribe to my channel and tell your friends. All right, I will see you in the next video. I'm going to put all of my video analysis today on a playlist so that you can start from the first one, which is the weekly outlook video where I look at the individual currency futures. All right, and then you can just let it play and I got you. If you watch the videos to the end of the video, if you watch my videos to the end, guess who's my friend? Drop a comment, let me know that's exactly what you did so I can shout you out. All right. I really appreciate that. I appreciate the love. I will see you guys in the next video.